Hello, everyone. So today's topic is stop being an emotional investor. And this is really for anyone who's investing in the market, whether you are new to investing or you've been investing for a really long time. We really have to get out of the place of using our emotions to drive our investing decisions. So today we'll talk about four emotions you want to avoid as an investor. So when it comes to money in general, there are so many emotions tied to money. So it's hard to not be emotional when it comes to money. And I get that, but you want to not allow these emotions to drive the decisions of what you buy or don't buy when it comes to your portfolio, whether it's your 401k, your IRA, or any other investment account. So the first emotion you want to avoid is FOMO, which is fear of missing out. Now, I did find during the pandemic, this drove a lot of people to invest in things like crypto. So when you think of the fear of missing out, this is usually how it goes. You will hear of a friend, colleague, or someone online mentioning how they invested in this cryptocurrency or a particular stock and how much money they've made from that investment. So naturally, human nature, I want that benefit too. So you may just run out and invest in this thing, whether it's a stock or a cryptocurrency or anything when it comes to investing, because you feel as though, well, if they made all of this money, I will probably make all of this money too. And that's usually not how it works when it comes to investing. Depending upon how early or late you get in the game, you may have already missed the boat to make this huge ROI. Now, I'm not saying you can't take information from someone like a stock tip or a tip on a crypto coin to say, well, let me look into it and then invest. But when it comes to FOMO, that's not usually how it works. You don't do any sort of research. You just buy the thing because you want to make a lot of money too, because so and so made a lot of money. And so you want that same benefit. So you will find that many times when you are using FOMO to drive your decisions, you will usually regret it. And here's why: because you don't understand what you're investing in. Right. And that's the worst thing you can do as an investor is to invest in something blindly. Ideally, when you hear any kind of information, whether it's a stock tip or a new crypto coin or any kind of investment, it's great to take information from all places. But as an investor, you want to make the decision based upon what you need and want at the present time. And so that's why we call personal finance, right? It's personal to you as the individual. So whenever you do get a tip on a stock or a cryptocurrency coin, that is when you start to do your own due diligence. You never should invest in anything blindly, especially if you don't understand what it is, what the company does, or if you don't even know what they're even talking about, right? So think about, I may have mentioned it in a previous live. When you are applying for a job, you don't just walk in the door and they hand the job to you, right? That company puts you through a vetting process before they offer you the job. So what does that look like, right? They're going to take your resume when you apply, look at your application. They'll call you in for a few rounds of interviews. Then they may move forward with references, credit checks, background checks, so on and so forth. And then they offer you the job. So you see how the employer puts you through all of these steps to vet whether or not you are a good candidate as an employee. So as an investor, you should be doing something very similar. Doesn't have to be very extensive, but there should be some sort of process that you're kind of walking through before you decide whether or not to invest in anything, right? So, of course, that vetting process will look different for all of us. But again, never invest in anything blindly because usually you will end up regretting it, and the only person you could blame is yourself. So FOMO, I have found, is one of the biggest, well, yeah, one of the biggest drivers when it comes to investing. And so we really want to move away from that and not just feel as if we're missing out. So we want into, and then you might end up losing a lot of money. So think about all those meme stocks, right? During COVID, like GameStop, AMC. There are people who made a lot of money, But there were also people on the other side of that who lost a lot of money as well. So this is why it's really important to move away from that and be really more level-headed and do your research before you invest. Now, I know that sounds boring, it sounds tedious, it's not sexy, right? But it's your money. You have to take it seriously. Again, I've mentioned it before, no one's coming to save you or I. So we really have to make sure we are doing our own due diligence to make sure we are being good stewards of our money. Now, the next emotion you want to avoid as an investor is greed. Now, greed and FOMO, I kind of feel go hand in hand in a sense, right? So, and this is how this will usually look. So let's say there is a particular stock or crypto, whatever in your portfolio that has made you quite a bit of money. So human nature has, right? We tend to gravitate towards positive reinforcement. So if you've seen this great result, you're going to keep repeating that same behavior, which is not horrible, but it can sometimes lead you astray. And here's how that might look. So again, you're investing in this asset, it's making you a lot of money. So naturally, you're going to keep putting money into this asset. But sometimes that could be to your detriment. If you're only focused on one type of stock, crypto, or type of investment, you're not diversifying your portfolio. So when things are great, the money looks good. But when things take a turn, now you have all of your eggs in one basket. And I know we hear diversification, 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 right? That tends to be the one buzzword when it comes to investing that you hear a lot. And while I do find it is overused many times, it is one of the core fundamentals of being a successful investor. You can't have tunnel vision and become so focused on this one thing that you forget or don't see the other things around you that could also be profitable. They might not be as profitable, right? But they could also be profitable investments, but you have this tunnel vision that you're not even paying attention to it, either due to ignorance, lack of information, or lack of willingness, right? And we'll talk more about that later in this live. So you really don't want to let greed drive your decisions as an investor. You really want to be level-headed. Now, again, I know it feels good when the money's coming in, but if it does take a turn, you have all of your eggs in that one basket. You have nowhere to kind of offset or hedge the risk. So that is really why it is so important. Now, you can, balance your portfolio in a way where you do have this one thing you like to invest in, but you also are focusing on other things that can also be potential profitable investments as well. So greed, let's stay away from that because again, it doesn't behoove you because eventually it will bite you in the you know what. Now, the next emotion that I find that tends to drive investors is anxiety. Now, usually with anxiety, it tends to prevent you from making certain investments. And so this is kind of the opposite of FOMO and greed. Now you're missing out on opportunities to make money. Now, anxiety is a thing where it's a real thing, right? Money does make us feel anxious. The fear of money, the fear of losing money, sometimes the fear of having a lot of money. Well, the feeling of having a lot of money can bring you anxiety as well. And so it is definitely a valid emotion, but you can't let it become paralyzing so much so that you're not making any investment decisions at all. And so this is where educating yourself as much as you can will kind of help alleviate the anxiety. Now, just to keep it honest and transparent, as an investor, no one has all of the answers. No one knows for a fact that what they're doing is actually going to work. But what they do have is a foundation of understanding to where they're making educated decisions versus just guessing and winging it. Now, of course, there's levels to all of this, right? We have people like myself who work in finance. I understand how to read P&L statements and financial statements and balance sheets and analyzing numbers and data, right? You can do that. But there are other things that are a lot less simpler that you can do as well to kind of help you learn more about investing. So as an investor, it's really important to understand the fundamentals. Again, you don't have to get fancy, but some of the basic language that is being used. So things like ROI, rate of return. What does that mean? Right? Index fund, mutual fund. What does that mean? Dividends. What are those? Right? Some of the basic terminology that are used day to day when it comes to investing, you do want to know what that means at a bare minimum so you can really feel a little bit more confident as you're making investment decisions. Now, I do have an ebook. I'll put a link in this caption of this video so you can take a look at that. It is called Stock Market Investing for Beginners, where I do introduce you to investing in a way that's simple and easy to understand. And so with that ebook, once you downloaded it, it'll also be available in your email so you can take a look at it. And I do break it down so where we have the fundamental terms and simple plain language. I also provide a mini investor checklist, which is one of the things I talk about in one of our previous live videos, where as an investor, there should be 4 or 5 metrics that you should be looking at before you decide whether or not to invest in a company. So this is that vetting process we kind of talked about a few minutes ago, very similar to the process that companies put you through as potential candidate. So you want to look at a few metrics to say, well, does this company meet my requirements, whatever those might be? So in this ebook, I do provide a sample investor checklist that you can check out. And again, this is just a baseline. Of course, you can make your checklist simpler or more complicated, but again, you need to find a way to vet these companies to make sure they meet your requirements. And yes, as an investor, you need to have requirements. And I know that might sound a little weird or make you feel uncomfortable because you're like, well, I'm just, saving for retirement, But you're an investor. If you are actively buying stocks from the stock market, whether it's through your 401k, through your IRA, or you just have a regular account through Webull, Robinhood, etc., you are an investor. I know it might not feel that way. It might feel uncomfortable because you're not spending millions of dollars. But if you have money out in the market, you're an investor and you should have standards and requirements. So take it a little bit more seriously, but not so much so to where it makes you feel nervous. But again, take yourself seriously because this is your money you're talking about. So when it comes to anxiety, the more you know, the less anxious you'll feel when making decisions. Now, will you feel 100% confident when you're making the decisions? Probably not. But as time goes on and you continue down this path of being an investor, you do become more comfortable. You do feel more confident as you're making decisions. And then from there, the more confident you feel, the more you tend to want to learn to then increase your confidence. You see how it all kind of goes hand in hand and it all kind of builds upon one another. Now, the next emotion that I do find that tends to drive many investors is doubt. And doubt and anxiety also do go hand in hand. So doubt kind of does the same thing where you may doubt your ability, you may doubt your knowledge. So therefore, you may not invest at all because of it. But again, that is not serving future you, right? I like to say you must do things today that future you will thank you for. And it's going to be learning about investing, regardless of how uncomfortable it makes you feel. It's going to be taking a chance of putting money into the stock market to see what it does and see how it goes. And I think for many people, they tend to want to wait to know all of the things or to have all of the money before they start. And that is the worst way to approach investing. You kind of have to start and then learn as you go. And I know that may, again, make you feel anxious because you're doubting yourself, but there's really no other way to do it besides starting, right? You can't just sit on the sidelines and hope that, well, one day when I have more money or one day when I start to learn more, I'll start reading that book and I'll listen to the podcast and then I'll be ready, maybe like next year. You're letting a whole 12 months go by of missed opportunities of earning money, all because you're letting your anxiety and doubt get in the way of that. So again, not the way you want to approach investing. It really is a situation where you have to kind of just start where you are, do what you can with what you have, and then figure the rest out as you go. And I know that can make you feel nervous and anxious because you're like, oh my God, what if I get it wrong? But what if you get it right, right? We have to kind of change our mindset. And also, as I said earlier, there are people who are managing billion-dollar hedge funds who don't know all the answers, right? No investor has all of the answers. We don't know if what we're doing is going to work, but we have a strong sense of confidence that it will. And if it doesn't work, you can make changes, right? That's the beauty of investing and money in general, right? When it comes to money, there are ebbs and flows. Money comes, money goes. But what does happen is If things go wrong, you learn the lesson and you figure out how to adjust. And if things go right, you now have more confidence in what you're doing. And so that's how we really have to approach not only investing, but money in general. We have to understand it's never going to be a straight up trajectory where you're always making money, you're always making money, things are great. You're going to have downturns. You're going to have bad times. Now, how bad those times are can definitely vary, but the whole idea is to know that bad times don't last forever and the rebound is going to happen. So think about any billion dollar corporation that you have here in America. They've had good times, they've also had bad times, but that didn't stop them from keeping the business moving. They just kind of pivot, they adjust, they work through it, and they keep planning and hoping and working towards better. So we have to kind of operate with that same mindset. We can't let certain tumbles and falls in life totally take us or derail us. We have to kind of be able to shift, pivot, be resourceful, and then keep the party moving. So really think about that as you are moving through your investing journey. There will be days you open your portfolio and you've lost money. That's just part of the game. You can't use that as an excuse to say, well, I'm doing something wrong. I don't know what I'm doing, so I'm going to just stop. That is not how it goes. There will be days you're going to lose money. There will be sometimes months in a row where you might lose money. Now, of course, you want to understand the why, but just know most times things do bounce back. Think about COVID. If we go back to February, March of 2020, the stock market essentially tanked. Think of how many companies had to shut their doors. They couldn't operate. And so they lost a lot of money, which means their stock value lost a lot of value as well. But fast forward, here we are 5 years later. I would say most of those companies, the ones who didn't go out of business, they bounced back and their stocks have rebounded. They're paying dividends and they're rocking and rolling. So you can't let a short term disruption throw you off track from your ultimate end goal. So really understand the ebbs and flows that come with money, but it's up to you to figure out how to be resourceful and how to push through it. So for example, we think go back to COVID, when the stock market was crashing and people were panicking, they were selling their stocks. There were investors who were having a field day. That time was very comparable to a Black Friday sale. They were using that opportunity to buy stocks on clearance. Stocks that were once $100, $200 were now 10, 12, 15, $20 per share. Right. So, but because they understand how their market works, they took the opportunity to take advantage of that. And now, 5 years later, they've made a lot of money on their investments because, again, they didn't let a short term disruption throw them off their overall journey as an investor. So, really, this all goes back to today's topic, not letting emotions drive how you invest in the stock market. You really have to be level headed, you have to be grounded, and you have to be willing to do your research. So, this way, you're making sound decisions with your money that may or may not pay off, but more likely than not, they're going to pay off in the long run. So, just to do a recap of today's topic. So we're talking about emotions to avoid as an investor. And the four emotions are FOMO, fear of missing out, greed, anxiety, and doubt. Now, there may be other emotions that we could put in this list, but I want to keep it pretty simple for today's conversation, as these are the four that I have found throughout my career that tend to be the most popular driving forces that people are using to make their investment decisions. So FOMO, fear of missing out. People were worryful about missing out on making a lot of money because someone else they know made a lot of money by buying this investment. So I remember when Clubhouse was a thing, during COVID, there was a woman who owns a restaurant. She lives in the Bahamas, I believe. And she mentioned how she had not saved anything for retirement. She was in her 50s and she felt so far behind. And she was a business owner. And so crypto, of course, during the pandemic became a very, very hot topic, very popular conversation, very popular investment category. So she felt as though crypto would be her way to kind of make up for not saving for retirement up until that point in time. So she had wanted to invest in Ethereum. And when I say invest, she wanted to put like $50,000 into Ethereum. Her children had told her to invest in Dogecoin. Now, she herself didn't know anything about Dogecoin. She knew a little something about Ethereum. So that's kind of why she was leaning towards investing in that. But her kids, who were, I believe, in their early 20s, had basically, what's the best way to say it? They kind of pressured her to invest in Doge. And so she went ahead and took the entire 50,000 and invested in Doge. Now, I don't recall the exact timing of when we were having this conversation, but Doge was definitely running, but she had gotten in on the tail end. So let's say she was buying it when when it was like 50 cents per coin. If you guys know what I'm talking about, going back to that time period, um, the people who are making a lot of money on Doge were the ones who are buying it when it was less than a penny, right? They're the ones who are making a lot of money because they got in on this investment so early. Again, it was less than a penny. So when the coin went to 50 cents per coin and they have put quite a bit of money into it, they made a lot of money. So I'm thinking this is kind of what her children were considering when they were making the recommendation to her. But her getting in at Doge being 50 cents per coin, she was getting in really late in the game. And as we all know, at that point in time, it never, I think the phrase was Doge, they were hoping Doge would run to $1 per coin. And that was basically what everyone was rooting for. Now, I believe the most it had gotten to at that point was 75, maybe 80 cents. And then the coin tanked. So again, during this conversation on Clubhouse, she was really kicking herself in the behind because she wished she had stuck with her guns and invested in Ethereum, because at least Ethereum was still doing well. But she put all of her money into Doge and she ended up losing so much money. So here we have a situation where the fear of missing out because this popular thing was running, people were raving about how much money they were making, and she wanted to jump on the bandwagon too. Now, she was kind of pressured into it, but she still did it, right? And the hopes was she would make a lot of money. And she ended up losing a lot of money. And this is an example of how FOMO can really drive you or find you in a place where you end up losing a lot of money because you're worried about what everyone else is doing. And so we have to move away from that. And again, focus on being strategic and making sound decisions as an investor. The next emotion we discussed was greed. And greed and FOMO, again, kind of go hand in hand. When something is making you a lot of money, you tend to really focus on that. And you really don't want to do that. And I get it. You're making money. It feels good. It feels great. But again, when things are good, that's great. But when things go bad, you're like, oh my God, what happened? This is why you have to diversify your portfolio. Now, diversification is one of those things where we use this buzzword, but we don't talk about, well, how do you do that exactly? Right? So there are a few ways you can do it. And I'll kind of cover a few briefly here. So if you are only investing in the stock market, the way you would diversify is to diversify by investing in different industries. So many people tend to stick to the tech stocks, the Googles, the Metas, the Amazon, the Teslas, but you want to move out of just only investing in tech companies. Look into healthcare companies, look into retail companies, look into companies that are in the alternative energy space, so on and so forth. So you want to find different industries to invest in. So you can find individual companies, right? That's a great way to diversify, or just invest in a simple index fund that does that for you already, right? Another way to diversify your portfolio is to invest in different asset classes. So this is where you would invest in stocks, bonds, crypto, real estate, right? And so now you have different asset classes in your portfolio. So now you don't have all of your eggs in any one basket, if you will. So those are two simple ways you can easily diversify your portfolio. But again, the whole idea is to not have, again, all of your eggs in one basket. And the last two emotions we talked about today is anxiety and doubt. And so these I do find tend to paralyze people. It tends to keep them from making investment decisions because they feel anxious and they're doubting their ability. Now, the best way to overcome anxiety and doubt is to educate yourself as much as possible. You want to learn as much as you can. So now you are using the tools in your tool belt essentially, right? To help you make decisions versus just guessing it, winging it, or not investing at all. Now, of course, you want to meet yourself where you are. You want to focus on either starting with a book. Again, I have an ebook. Check out the link in the caption down below. You want to listen to a podcast. Again, you're watching this YouTube channel, right? There are many ways to start learning as an investor, but again, you want to do it at your own pace because back to what we said earlier, when it comes to personal finance, the journey is personal to you. So you are running the show, you are determining how things play out. So again, you want to meet yourself where you are. Now, you might be more of a visual learner, so hence YouTube might be the better option for you. But others prefer podcasts, and others prefer ebooks, and maybe you want a combo of all three. Who knows? But only you know what's best for you. Only you know what capacity you have right now. That's the other piece, right? There are ebbs and flows in life, and you might have busy seasons. You might have other seasons where you have a little bit more capacity to learn and spend the time. So you kind of have to work with yourself and move through that the best way you can. So definitely keep that in mind. No pressure to move fast and furiously. You again need to move at your own pace. So that is it for today's live, everyone. Now I did change the date and time of these weekly lives due to personal schedule changes. So I'm going to keep this Tuesdays at 9 a.m. Eastern for now, and hopefully we can keep that schedule until further notice. But that is a new time slot, and that's why I wasn't live last week. But this is our new date and time. If you're not subscribed to the channel, make sure to subscribe and also follow me on Instagram as I am hosting a 7-day investment challenge starting March 31st. So if you follow me over there, you'll learn more about the challenge. And that is it for today's live, guys. Talk to you next week. Take care.